Hello, friendly investors. Let's take a look at something that you're going to like. How do I get started in rental properties? One, look around the area. Walk around. Take a look at the area. What do I mean by that? You walk the street. It's simple as that. You walk the streets and you figure it out. Where is it that everyone is? What's going on? What are they doing? What kind of store do we have? Do we have a Starbucks? Do we have something less? Do we have a Whole Foods? Do we have something else? What is in the area? Because that, my friend, is a secret. Because rental property is a local market. Two, get onto Zillow. Find out what is selling for how much. Get a value, the sense of the value. Look it in. Zillow will tell you what's available for sale in terms of multi-properties. Yes, sir. You look, get around, 1 unit, 2 units, 3 units, look at the price. Then you have an idea of what's available for sale. Is it just one property or a bunch of properties? It means different thing for different people. 3, take a look at what, in Zillow, take a look at what's sold in the past. For how much? That's important. Why? Well, you want to know how much you should be buying it for. The unit next door sold for 300 and you're going to offer, now they want 500,000 a year later? I don't think so. You want to make sure you get the value for it. 4, take the rent. Take the value of the property. Let's say it's $100,000. 1% of that should be your rent. You should be paying $1,000. You should be asking for $1,000 a month. Then, the most important part, take a look at how much financing is going to cost you. So take your $1,000 times 12, 12,000 minus annual expense for interest for your loan that you're going to take, minus insurance, minus real estate. Draw a line, and that gives you an amount. Let's say it's, I don't know, $10,000. So you start at $10,000 rent minus $5,000 of expenses. Those expenses I talked about, the 3 expenses, you're left with $5,000. So basically, then you compare how much money you put down. If you put down 10,000, you end up with 5. It's a 50%. That's not bad. Except that is not a real number, that 50%. Why? Because you need also to take a fact that you may not rent the place all the time. And also the fact that things are going to break down. You need at least 40%, right? And then maybe after the expenses happen, you end up with 20% return, which is good. But if you start with 20% before expenses and loss of rent, that's not going to work. Remember, you need 40% before real cost starts coming in.